Welcome back to another episode of the Erickson Brothers Podcast, where we talk about the returns of life's investments and we talk about the questions that we don't know the answers to. On this week's episode, we're going to dive back into some of the core principles we talk about here, being the 4 F's, being faith, family, fitness, and finances. And we're going to go over some exciting new stuff. I got a lot of stuff I want to be able to pick your brain about, Matt. How's your week going so far?
It's good. I think this is the second time we've done this in the middle of the week. So again, just finding myself in a different mindset than I would be on a Sunday night when we usually record. So I'm excited. And we'll see what this week brings.
Cool.
Let's get right into it.
Yeah, let's definitely do it. So I went to Texas, as I mentioned on the last pod. I went to Texas for a short 24-hour stint. And I had a great time in Texas. But one question, so I went with my grandpa, right? And we were visiting my grandpa's sister for context for everyone.
Yeah.
And she's getting ready to pass away, but she's still very sharp. Like she's like recalling memories from like 50, 60 years ago. She knew where she lived. She remembered addresses. She remembered names. Like she remembered all that. And I asked her, I said, I asked her the question that Lewis House asks at the end of every single podcast he does, which is if you couldn't leave behind anything, right? You couldn't leave behind any relationships, any memories, any physical things, right? All you were able to do is just leave behind 3 pieces of advice. You could only have 3 pieces of advice. What would those 3 pieces of advice be? So you kind of have to like wrap up your whole legacy within these 3 things. So I'm curious for you, Matt, if if you can put yourself in the frame of a 96-year-old man and you've accomplished everything you want to accomplish, you've lived the life of your dreams, right? You have the incredible family, you have the business, you have every success you've dreamed of, right? And your grandson asks you for the same question, right? What's your response?
Wow. Well, I guess I'm glad I'm not 96 because I don't really have anything too profound. I think the one thing that comes to mind immediately is just work work harder than everyone else. And like that, honestly, like that I think that has gotten me this far in life. And I think it well, again, we'll see. We always say this on the pod, but our answers might change over time. But if you can working hard has gotten me a lot of things. It's opened a lot of doors. And that's just one of those things where I've controlled what I can control is my work ethic and the effort I put in. On top of that, I would say just treat people well and uh, like just love them. This past weekend I was able to uh, bring a bunch of friends together that didn't really know each other, and there was college friends, high school friends, current roommates, and they've all like slowly gotten to know each other over the past few weeks since a lot of them are in New York. They're all in New York City. But I did a dinner with uh 11 of us. And I like made the reservation and just got everyone together. And I just loved just being able to do that with all my friends. So work hard and love people, I think, are my 2 things right now. And at 24 years old, I guess I have the remaining 72 years to figure out the last one. So that's where I'm at.
Love it. Love it. So I already heard her answer, and I'll share what she says at 96. But if I were to,
Well, I'm gonna guess that she says pray every day, trust in the Lord, and I don't know what her third would be, but I'm thinking her two of them are a lot like that.
Yeah, exactly. Um, yep. So number one was have your destination set in heaven and on the faith and hope of Jesus Christ as your Lord and Savior. So that was number one. Uh,
Mm-hmm.
Number two was approach every situation in your life with integrity, as
Mm-hmm.
that is the number one thing you can have when you approach any situation is integrity. She talked about like relationships with your spouse, relationships in business, relationships with your friends, all that. And then number three, she just mentioned how just like important relationships are in general, and how that's really what you want at the end of your life is you just want good relationships. Um,
Wow. So I was close with, like, kind of spot on with one of them.
yeah,
Like, or at least we were similar. Like, treat people well, have good relationships. Like, that's pretty much the same thing.
yeah,
Mm-hmm.
yeah. But
That's cool.
it is interesting thinking of like if you could only leave behind like if your whole legacy was wrapped around like three things you could mention. Um, and I really like looking at it from that perspective, especially people that aren't where they have to answer that question, where they're like on their deathbed and they are answering that question. I like putting yourself in that mindset because um, it really makes you think of what's important in life.
Mm-hmm.
Yeah. So
It does, and
yeah,
it definitely guides. Yeah, hopefully, it guides your future decisions.
yeah. I mean, ideally,
Yeah, yeah. So what would you say?
um, I would say number one, know that um, I would say the most important thing is that you know that Jesus Christ died on the cross for your sins, and that that's literally the most important decision you can
Mm-hmm.
ever make in your life is accepting Him into your heart. Number two, I would say, as of right now, I would say um, just having being optimistic towards the future and
Mm-hmm.
expecting things to go your way in life. Because what they'll do is they'll allow you to take chances that you are unsure about, and they'll allow you to um, make investments that you don't know the outcomes to, right? And if you aren't optimistic, then you won't take those chances because you don't think they're going to go your way. And if you don't take those chances, you're not going to have a chance for a big return.
Mm-hmm.
And that's something I've really seen in my life is just being optimistic about all the uncertainties that I have going on. And then number three, I think what it's going to be for me is to find one woman and to not focus on chasing girls. Um, because I think at least my personality, I could go out every single night of the week and I could love spending time at the bar and I could love like chasing girls. That's for me that could take up a lot of my time if I let it. Um,
Yeah,
and I know that
like, yeah. I mean, anybody could.
right, and I know for me that
Yeah,
like um, I tell people that I'm in a relationship and I have a girlfriend, and like even as like simple as that is it allows me to kind of focus and not have to go around chasing because I mean it could be a time suck really.
yeah, yeah. I would say, as somebody who does not, as a single and ready to mingle individual in New York City, someone who doesn't have that one person, it does take a lot of time uh to, like, chase after girls. But, like, if you don't chase, then, like, nothing's gonna change. um
Right. Well,
obviously
that's like
obviously you
that's unnecessary.
Yeah, well, obviously you need to be looking in the right places. But, like, if I were to sit in my room all day, I would not meet anybody, you know.
Worthy of
So,
yeah.
right. So it's but it is tempting, like, going to bars and having fun and all that. So I think
I mean,
the
some people can get caught up in that for like 10, 15, 20 years of their whole life. You can be like a 45-year-old man, like 45-year-old divorced guy that's still caught up in the chase, and that can really
yeah,
consume your life. And I've
yeah.
seen examples of that of even people we know that are close in our lives. Um, so
hmm Yeah, well, I think full disclosure, am I'm in the chase. I think what I mean by chase and what you mean by chase is it might be a little bit different. Because you have a girlfriend. But um there is that I don't know what will happen with my future relationships. Hitting a roadblock. But anyway, let's move on.
yeah, cool. So yeah, first thing, first kind of topic of the day. Um, I had another interesting conversation on the way back from Texas, but I can share that after if there's nothing like. Do you have
Let's
anything?
just keep it rolling. Let's keep it rolling with what you had.
Yeah. Okay. So
Um,
yeah, coming back from Texas on the airplane, um, my grandpa and we were talking about real estate, and he was talking about how um, he was a loan officer for a long time, and that he did workouts in real estate. And I didn't even know what a workout was. So like I was asking him
mhm,
about it, and he was telling me basically how workouts happen when like commercial real estate companies, like an owner of a company defaults on their real estate
yep.
loan, their mortgage. Um, they have to refinance and they can't pay the interest rate, whatever it is. And the guy sitting next to us was a VP of a real estate brokerage in San Diego. And he was in charge of the workout division of
hmm
real estate. And that wasn't something I knew at all. Like I didn't even know the term workouts. Uh,
Yeah. We have a we're doing a workout, or a few people on our team are doing a workout for a company right now.
okay, so yeah, what's your understanding of what a workout is?
Uh, like you were saying, it's basically when either the company or the asset goes into bankruptcy. It's basically determining who gets what in default,
Hmm.
like where you fall, like where different lenders or different um the different lenders fall in the capital structure, and allocating the value of the assets that have defaulted, but they still have some value and now they belong to the lenders, and it's dividing that up. That's my understanding.
Yeah, yeah. I
Is that
mean, that sounds like what he did. And
hmm
I was curious. Like, I was picking his brain. I was like, one question I asked him, I was like, "What's something that's really intriguing right now in the real estate industry that I might not know?" And he goes, "In 2008, the housing market crashed because of the subprime mortgage bonds and the banks not being able to
hmm
like the banks qualifying people that really weren't able to take on a mortgage." And he goes, after 2008, they put in all these regulations for like how much like debt to equity ratios for mortgages and all these
hmm
different percentages to make sure 2008 would never happen again for the
yeah
banks. And he goes, one thing that's really fascinating is if you look at the commercial real estate side right now, and even the residential side, is private equity companies are now buying up mortgages and reselling them. And he goes, there's not nearly as many regulations around private equity companies. And he goes, the way I see it, it's going to be another bomb. And he used the word bomb, and I'm like, whoa. And he goes, yeah, because all these companies are going to have to refinance, and these private equity companies don't have as much regulation on how they can repackage stuff. And he goes, it's scary to look at. And that's coming from a VP of a real estate company. And I thought that was kind of cool. I don't know if
well
cool.
yeah I
I thought it was crazy.
that is a big portion of my job is doing coverage for. We provide lending to private equity companies. So, uh, as working for the bank, we provide lending to the companies, and my team in these deals is we're the syndication team. So we'll underwrite the lending portion to the private equity company, and then we syndicate that debt and we package it or we sell it to other banks. And other banks have this function, we don't, but other banks can sell the debt to institutions, and and that is made up of collateralized loan obligations. And in 2008, it was collateralized mortgage obligations. So the CMO version in 2008 is now the CLO in 2023, and you have these different portions. It's basically percentages of debt for private equity companies that the banks and the private equity companies have sold off of their books onto to other banks or to institutions, and then the institutions package them up, sell them as a collateralized multiple loan obligation, and it trades, has a secondary trading and trades like a bond or a stock on a market with supply and demand economics. So it's
do people at your company, are they worried about what's happening with the market right now? What do you
well the well uh so 2021 and 2020 was huge for these collateralized loan obligations because that's when private equity took off. Money was cheap, valuations went sky high, companies piled on debt and sold off these these collateralized loan obligations, and as basically free money. So you had all these just an insane amount of supply of this like secondary traded asset that was a loan, collateralized loan. And now as interest rates have risen, a lot of issuance is going down because it's more expensive, and that is affecting the secondary trading of these collateralized loan obligations, and people are pulling money out of the leveraged loan market is what they call it. Leveraged meaning like poorly rated, not investment grade, it's not treasuries, it's high yield or junk, or even lower rated than that. And the leveraged loan market is seeing effects for the first time of what it will look like to exist in a high interest rate environment. And I still think the effects are still have yet to be
they're pending.
They're pending because we're still like the the tidal wave of the 5% interest rates hasn't really hit. They like the Fed funds has risen it, and you saw one with the SVB collapse, and like that led to like a little bit of a repricing. But I still think there will be secondary effects, and as long as the Fed keeps interest rates high, I think it'll be really interesting to see what these leveraged loans and these collateralized loan obligations happen. And that because a lot of them, like there's actually one in the market last week called Citrix, one a few weeks ago, Twitter, Nielsen Holdings, all these are they're called what they're called now is called hung LBOs. So because the debt is hung on the balance sheet of these banks and they can't sell it because the private, so like in Citrix, it's like bought out by this private equity company, banks take on the debt, or like the Twitter thing, like all these banks like went into this Twitter deal, right, with Elon, and then they weren't able to sell off that debt. You following?
I'm following.
So they held the debt on this balance sheet, and with this Citrix deal, which was like a multi-billion-dollar deal, the market was pretty uh good for timing last night. So they finally, or not last night, last week. So the market, these banks that were holding the debt, that they officially hadn't given up any losses on it, but they knew they were going to. Last week, they finally sold it for a deep, deep discount when they were selling these at like par or close to par, like maybe 98 original issue discount or 99. Now they're selling it at like 60 or 70, and the bank's taking
So they're
each,
they're taking a huge loss.
each bank is taking millions and millions of dollars of loss. But they did it last week because they're like, okay, we can get 65, but maybe next week we can only get 60, and in a month from now, maybe we're only able to get 50. So all these banks kind of like finally bit the bullet and
Wow.
and took all these losses and finally wrote it off their balance sheet. But up until then, they're just hung. The debt was hung on the balance sheet, and they didn't have anywhere to put it because no one was willing to buy it. So it's kind of just sitting on the balance sheet and just slowly like going down in value. And then when the market hit that like
Yeah.
plateau or a little bit of like a uptick, they sold it, and they sold it to investors who were willing to take the investors who were willing to like package it into a CLF. The investors were willing to buy the debt. I don't know exactly what it went for. Let's say it went for 70. So they can buy 70 cents, or they can buy a dollar's worth of debt for 70 cents. And is it worth 70 cents? Is it worth a dollar? Is it worth less than that? Like,
Because it's
I guess
backed by a company, right? And based on the value of the debt, is it like if the company is going to be able to like do well? Is that kind of what it's dependent on?
it's well, anything, values based on like what people decide it to have value, like,
Well, so
so
let's play this out for like Twitter, for example. Like, so Twitter needed to raise money, so they issue
they
bonds,
did.
right? So like let's break this down for
It
the
wasn't the bonds.
non-finance majors, right? So like Twitter needs money, right?
So Elon Musk bought out Twitter,
Right.
right? And he used debt to finance it, and he used uh bank debt to finance it. And I don't know the exact numbers, and it was a few months ago. So if
50
one of
billion,
our
50 billion or something like
it was
that.
like 40, I think it was 44 billion. So all these banks jump on the deal. They're like, oh, Elon's great. He's going to go to the moon. He's got SpaceX. He's got Tesla. We're going to value Twitter. We're going to value this thing at 44 billion. All these huge banks like Bank of America, JP Morgan, um, Wells Fargo, they all jump on it and throw money at Elon Musk. And he starts doing all these weird things. And then the value of Twitter loses, it goes down. And because of that, the debt, it eats into the debt portion of the buyout, this
Mm,
leverage buyout. And the debt is on these banks' balance sheets as a liability, and they don't know what to do with it, because they thought they were going to be able to sell it to institutions or other or in the bank market, and uh, weren't able to until they priced it down, until they kept on knocking the price down, until an investor, or for example, an investor said, "Yeah, I'll buy it. I'll buy the 100 the we'll say $10 million worth of debt for 8 million bucks." And like it, and the risk in that is that the value goes below 8 million or what have you. So
Yeah.
uh
Well,
yeah, so
there's
so
a lot of layers to it.
a lot of layers to it, and I'm not 100% sure I got all the details correct, but
Yeah. I
that
think
I'm yeah.
yeah, so how could it for somebody listening in that is, let's say it's somebody that's early in their career, right? They're
Hmm.
just getting their business off the ground, or they're just getting their career built, and they don't have much money. Let's say the economy does take a turn for the worst in the next 1 to 2 years, like it's predicted. How do we change how we invest our money? Like, what would you say?
Well, I'm not a financial advisor, um,
Disclosure,
but
just disclosure. Make
yeah,
sure you.
full disclosure, I'm not a financial advisor. But what has been interesting the past quarter is that Bitcoin has slowly risen back up to 30K. And that really
Low
hasn't
key
been
though,
taken
low key.
that, and no one really talked about that. But it's one of those things that it's just like you need to look where no one else is looking. And it honestly might be uh um, like just safe assets. Corporate bonds like Starbucks, Apple, like things like that, like investment grade bonds that are gonna pay a coupon and will trade in the market that you can hold, or like a 3 month treasury, or a 6 month treasury, or 1 month treasury, or 1 year treasury, whatever it is. Like those are safer investments that will guarantee you a very low rate of return, but um, it's safe. And in the market, when people keep talking about hard landings from the economy and rates for longer and all this speak of a recession, like at the end of the day, you'd probably have you probably want 5% return on your money over negative 20% or negative 50%. Uh, so it's not flashy, it's not exciting, but that's also what the Fed is trying to do. They're trying to get money out of these collateralized loan obligations. They're trying to get money out of tech startups. They're trying to get money from just being thrown around, tossed around willy nilly. And they're trying to bring investors down down the yield curve to safer places. So that could be savings accounts, it could be CDs, could be corporate bonds, could be it could be ETFs of corporate bonds. It could be value stocks, whether that in healthcare or uh, like just durable consumer goods. So uh, there's a lot of ways. There's a lot of places you can put your money, but also for somebody who's just starting out in your career, like I wouldn't pay attention trying to time the market in terms of trying to like put your money in like the perfect time. Like I'm not going to reallocate any of my 401k investing
Mhm.
because I know I'm not I don't need it in a year or 2 years. I'm going to want that in in 40 years. So
Yeah.
um and so it's hard not to pull your money out, but like that's what you need to look the other way in investing. And like when everybody is fearful, you need to be
Greedy. When people are greedy,
greedy.
be careful.
When
Yeah.
everybody's greedy, you need to be fearful. So
That's Warren Buffett right there.
right, that's Warren Buffett. So right now we're in a time of it's it, like the
Right now we're in a
market.
time, I would say we're in a time of fearfulness. I would say. I
I
mean,
don't know. I don't. I think the market is still greedy. I really do. I think that the market is still thinking and they take any small thing that the Fed presidents say, and they are any dovish tone that the president of the Federal Reserve Bank of Kansas City is going to say, and they're going to run with that until the next FOMC meeting, which is this week. So the market is still like very ignorant towards the fact that Powell has said rates higher for longer, 2% inflation, like yada yada yada. Like this thing, the market is still like, oh, they're going to start lowering in end of 2023, but inflation is still at 5%, which is more than 2.5 times what the Fed wants it at. And in my opinion, with lots of things, like what got the Federal Reserve from 8% down to 5% is not going to be what gets them from 5% to 2%. Like in anything, like I've said this before, but the jump to 80, 85 to 90 is not going to be doing the same things is not going to get you from 90 to 95. Like the way you make your first 100,000 is not going to be the way you make your second 100,000 or like your first million. Like you're always going to be having to adapt to the situation, and what worked in the past isn't necessarily going to work in the future. So I still think that Jerome Powell keeps rates higher for longer, and he doesn't lower at the end of 2023, which is what the market is pricing in right now. And he keeps them higher for longer, and he sticks to that 2% inflation, because when there's a chance that the market plummets and we're at 3% inflation, and Powell says, "Well, still too high, keep it higher for longer," or we're at 4%, and people are still doubting whether he really means 2%, and I think he does. So, yeah, I think there's a lot to digest. But that's kind of my take on it, which is probably a little bit more skeptical than some people. But
there's a lot at play. A lot at play. Well, that was quite the deep dive we kind of did into corporate finance and the overarching macroeconomic realm. Sweet. So let's do a 180 pivot for a quick subject to talk about. Give me a random conversation you had this past week, or somebody that you met, or like any random coincidence that you had, like first thing that comes to your mind over the past week.
Yeah, I've been listening to a lot of a lot of sermons. One, the church I go to on Sunday here in New York City, I always listen to that and Flatirons, and I've now listened to about 5 or 6 sermons from this church in Texas called Harris Creek, and a lot of them, I keep on hearing this theme around prayer and how important that is. So I've been reflecting on that and attempting to pray more in my own life. And what I think that has just started with just being grateful for everything that I do have, and all the opportunities I've been given, and the opportunities I will have in the future. So
yeah, I like that. One thing my pastor told me to do when I was talking to him about like how I pray in the mornings, how I like want to be intentional about trying to spend some time with God. And he says when you journal, he goes like put Jeff, and then write out your prayer, and then put God, and then put your pen down, and then listen. And just listen to what God's trying to say. And he goes, it's like a muscle. You got to work on it. You got to build it up. but God will begin to start to tell you things, right? Especially if the Holy Spirit's inside of you, God will start to tell you things. But he goes, put your pen down and just try to listen. And I was like, all right, like, how do I know if it's coming from God or if it's just what I want God to say to me, right? I was like, how do I know it's just not what I would want God to say? And he goes, know that if it's anything, he goes, that's why you have to, that's why you have to read the Bible so that you know what God does recommend. Like you got to know how God speaks and like the characteristics of God. But he goes, God will talk in like a quiet, subtle voice, and he'll be very direct with what he has to say. But it's like quiet and subtle, and I really like that. So that's one thing I've been implementing is just like a chat. Like I say this, what do I hear God say? I respond, I listen. What do I hear God say? So that's what I've been doing.
Interesting. Yeah, I guess my initial reaction is I've got two things. One of the things the that the pastor on Sunday talked about was how a mature Christian, there's like three stages um as a Christian. You have like your baby Christian, your adolescent Christian, and your mature Christian. And he was referencing C.S. Lewis, who talked about Christians in this way. And he just talked about the Christians in this way through a parable with corn. Uh, but he was talking about how there are times a in in Christians' lives when it's like a spiritually dry time, and it's just like you're committed to the faith, you're praying, you're reading, but God's not God's not answering. And the pastor getting at is that he's testing your commitment, and you're growing in your commitment to God in that way, because the relationship is based on a commitment, not a feeling. Because it, like, when we become Christians, we're on fire for God. It's like it's a great feeling. We're like overflowing with the Holy Spirit, and it's a feeling, because that feeling needs to get us to the point of commitment. But when we're at commitment, it's the feelings will come and go, like in any feeling. So that uh that's what I am thinking. And I guess another thing, like when a baby cries, like the somebody will say, "Oh, baby, like what's wrong? How can I help you? Like, how can I help you?" But when a teenager cries, the person goes, "Hey, stop crying. Why are you whining?" So different stages in different people's lives call for different responses, and the not everyone gets treated the same, because we're all at different places. So I found that interesting.
Yeah, I like that. There's times in your life that are spiritually dry.
I
Wow,
I mean,
I can relate. Damn.
and I think that well, the Christian, like the adolescent Christian, will be like God, like I'm praying, like I'm 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 angry, I'm doing this, I'm going to church, but like I'm not hearing anything, and I just feel like I'm lost. And the mature Christian will just stay committed. Uh, and one of the things that the pastor said was that God is not here to absolve sin uh, in our lives in this world. Like it's a part of the human experience, and that's what brings us closer to God. Is our commitment towards Him and our reliance on Him. But there is brokenness in this world, and through that we commit more to Him. So that makes sense.
Cool.
So yeah, that was my reaction. But yeah, I think there are definitely times when I'll be thinking in like an external thought, just like comes into my head, and I'll be like, okay, that felt different. That was a little bit different. Like let's lean in on that. Uh, and it might be you can think of it like one of two ways. You can just like, oh, thinking like, oh, I'm crazy, probably will are anyway. But like the uh when that thought just keeps coming into my head, that's like very external, it's very random, it's very direct. Like that's when I start listening.
The quiet, subtle voice.
hmm hmm But I think that God can be direct and loud too. Like I think
Yeah.
there's
Well,
been times in my life when he's been like, yo, get your act together, and he's banging pots and pans. Um, and he said, Matt, you're still an idiot. I'm gonna have to make this even louder for you to hear because you continue not to listen. Uh, so I think it definitely depends. Um, because we're humans and we're growing. So yeah.
boom. Love it.
hmm
That was a great way to finish up. Uh,
hmm
well, got another busy week ahead. I personally, I'm not changing anything in terms of how I'm investing my time and money. Um, Investing my time into going out to beautiful Grand Rapids, Michigan, and going to spend some time with my girlfriend. Invest there. But nothing major. Matt, any new updates for how you invest the only two resources you have control over?
Got this test. Got my last test for my job. So I'm excited
Let's go.
to I'm excited to study for that and be done with it.
Grab some
So
dough.
that yeah, so that'll be good. And I talked about it indirectly, but like work's heating up, so work is longer, but I enjoy it. Learning a lot. Or maybe I'm not. Maybe everything I said about finance today was just wrong. Um, but yeah, investing time through that money. I think. Well, I one thing I did do last week. I kind of called it like my adult week, and I just bit the bullet and I just spent money on things that I needed to spend or invest my money in. So I went to the dentist.
Okay.
Um,
Dang. I gotta do
I
that.
I went to the dentist. I bought a headboard, like very adult things, and I bought a credit card. Um, just like
You don't buy a credit card, you apply for them.
well, I applied for it and there's a fee, so I applied for a higher level credit card, and it's just like I just like bit the bullet. I was just like, okay, my adult week. I also got new socks, got new underwear. I moved my bed
That's
around.
probably out of everything you mentioned, getting new socks is probably the most adult thing you could.
It was just like one of those things like, okay, I need to do some like adult things right now. I moved my bed, like got the headboard. It hasn't come yet, but I bought a fan. Like it's just so many boring things that I could have gone without. But just like I just needed to do it because it was just like it's the adult thing to do. So
Yeah, good.
yeah.
Love it. Love it.
hmm
Uh, Sweet. Well, best of luck with your test coming up this week. Um,
Thanks.
I'll be praying for you, bro. And
Thank you. Thank you.
yeah, finishing up episode 14.
Yeah. Wow. Alrighty.
Yeah,
All
cool.
right.
Thanks for listening in, tuning in, and
Yep.
until next week.
Yeah. Until next week. How you do anything is how you do everything. So have a good one, gents.
Bye.